So today we're joined by Jon Francis of Chimnie. Jon, how are you doing?
Very well, thank you. Very well. How are you, Jake?
Yeah, I'm great. I'm great. Thank you for asking. So, Jon, could you tell us a little bit about your background and also Chimney's mission statement?
Yeah, absolutely. So my background, I was working at Google and YouTube for the best part of a decade, helping them with their insight and data systems. I came out of Google really to come into property. That was what I was interested in from a data perspective and a consumer perspective. So about 5 years ago now, I founded Chimney. And our mission statement is to be the single source of truth for the UK property market for property data. So that means constant, correct, real-time property intelligence at an address and UPRN level.
Great, thank you, Jon. And you've mentioned your background, obviously not in insurance, and many successful tech solutions in insurance do originate from different sectors. So could you share the journey of how your platform initially started and what the catalyst was that made you realize that the insurance industry was in desperate need of a more reliable, real-time source of property truth?
Yeah, absolutely. We didn't choose insurance first, so to speak. We were kind of pulled in by insurers and broker platforms because existing property data was too patchy or slow or opaque. The way we originally started was as an off-market property platform where we'd basically built profiles for every single property in the UK. And I'm talking residential. We now cover commercial and residential, but that was how we started out. And we were monetizing that platform by providing upstream mortgage referrals. I think what we realized relatively quickly, certainly within the first 2 years, was that the real value in what we'd built was the asset of the property database and that source of truth. And we'd learned a lot along the way of doing that. We'd had to, acquire some variables and had seen the poor predictivity of some of those and the poor modeling. So from there, we'd really set out to cover 35 million properties across GB and Northern Ireland, 500 variables, 100 data sources. And we still use that B2C site as a research platform, which we use for a feedback loop. So we're constantly hearing from users about some of the underlying sources. And that holy trinity that we were being asked for effectively from our customers was they wanted speed, they wanted great costs, and they wanted very high quality data. And it is really just rare to get all those three at scale, which has been our play. And yeah, I think the point of that was just making property decisions fairer by giving organizations an auditable and reliable picture of every address. So that was really what we set out to do. Yeah, I think that covers everything on that.
Great, thank you. And you mentioned, I guess, the holy trinity of aspects of data, and touching on the quality aspect. There's often an assumption that if you buy a data set from an established provider, the modeling behind it is fundamentally sound. However, we know it's not always the reality. So why is a lack of transparency regarding data or how data is compiled and modeled such a critical risk for insurers? And what are the real world consequences when carriers rely on what turns out to be inaccurate data for fundamental property metrics?
Yeah, that's a great question. If you're making pricing and reserving decisions on inputs that you can't audit or validate or defend, that's a real problem. And the standard, which is what we've really aimed to build, is that for each variable, you should be able to declare the source, the blending approach, the coverage, the accuracy. And for us, if we model something like missingness, we test on a holdout group and publish performance. When we were acquiring, so for our original business of helping with off-market property profiles, we acquired a lot of bedroom data. It was something we obviously didn't have. We were relatively new to market. We hadn't had time to be able to compile these sort of sources. And what we found is what we'd acquired from a relatively well-known industry player had absolutely no predictivity. We couldn't use it. And that was a 4-figure sum we'd paid for national coverage on that variable. So having to make decisions when you don't have a big validation group causes some real challenges, which for a startup is obviously a much bigger problem than it is for a big insurer. I would also say the industry problem is, or a big industry problem is that even for internal data science teams, it's really hard to validate something like rebuild accuracy to the needed precision. And that's challenging, right? When you're writing on these kind of variables. So yeah, to answer your question, I think truth and integrity, when it comes to those, transparency isn't just nice. It has to be the baseline for trust.
Yeah, it makes total sense. I mean, even when data's accurate, it's not always kind of cut and dry. It's not always black and white. And so when you factor into that inaccuracy, it can really compound the effects. And you've mentioned acquiring that kind of source of data early on, finding out that it was not applicable for use given its accuracy. And so obviously you've had to validate that, or to kind of look at new sources of data, which you've then had to validate. So for our insurance carriers listeners that are looking to modernize their risk data infrastructure, but they're skeptical about vendor promises, how can they go about validating those external data providers at scale before integrating them into core systems?
Yeah, I know it sounds weird for me to say it as somebody who's built a property data company, but we strongly recommend that multiple providers are tested head to head. That's how we grow. It's how we operate. That, we'll be running it against 1, 2, 3 other providers, and we should win. Like there's no two ways about it. We should have the best truth. And what you should be looking for in those head to heads is systematic discrepancies. So a practical test recipe would be, for example, pick a sample, like 10,000 records across geographies, across property archetypes, compare the outputs across providers. So look for spikes, disagreements, reveal the cracks in the modeling, and don't rely on vendor golden samples, because scale realistically is where it breaks. As an example, we've literally just finished a proof of concept that required 2.9 million records. So definitely one of our larger proofs of concept, but they really wanted to understand at scale what the predictivity looked like. And fortunately for us, as we would expect, they found clear correlations with claim and loss ratio segmentation across variables. So I think that red flag line should be that if a provider is resisting meaningful scale testing, or proof of concept access, then that should tell you a lot.
Absolutely, yeah. I love the honesty and the confidence in that answer. It's the advising the vendor head-to-head approach, and the confidence in the fact that your data will kind of prevail there. I mean, I think it says a lot about your view on your own data, and that's evident as well from the validation that you've previously talked about. So in property underwriting, the industry has historically relied heavily on quite standardized methodologies and broad averages to calculate things like rebuild costs. So what's the fundamental flaw in relying on an average to dictate pricing, especially when it comes to, I guess, the nuances of property finishes? And how does that ultimately disrupt the profitability of an insurer's portfolio, both at the top and bottom ends of the market?
Yeah, it really is a challenge. An average, what we have seen is that, that average is wrong for almost everyone. And rebuild in particular has a huge tail risk, both underinsurance and overpricing. When it comes to using calculators, which has been the standard approach to this point, what you end up seeing are coverage gaps. So things like listed buildings, unusual builds, high value properties. There's also a pretty high input burden on the broker or on the insurer to have to fill all those details out inside a calculator. And at the extremes, really that's where the economics and consumer harm are potentially biggest from using averages. On our side, we saw this quite early as a challenge, that averages just weren't suitable. So we had to move beyond a single average and moved on to tiered finish assumptions. So if you're looking, for example, at a renovated ex-council house versus a mansion with a stable out the back, taking an average rebuild cost on that when the finishes are going to be vastly different is just not going to be suitable. They're two pretty good examples. And what we do on our side is we break down the material and labor components and break them into finish types. And then we're classifying every single property into a finish type, which has been a massive amount of work on our side. And we've had some very happy customers as a result of it. And I think the other thing to remember is if you look at what's currently being provided in market in terms of rebuild costs, it is pretty opaque how that's modeled at the moment. It is quite brittle. You can see pretty big fluctuations, even from month to month, in material and labor costs. So I have to come back to transparency. You have to fundamentally provide transparency on these figures. And I think the last thing I'll say, the challenge that we've really run into is a lot of prospective customers have almost had a fear that if they move away from their past portfolio modeling and into this new modeling, like a 3-tier model, for example, it could disrupt their past valuations. And fortunately, because of things like the witch super complaint last year, I think more and more of the customers that we're speaking to are saying, well, actually, we do need to start looking at this properly and accept that there is some tail risk, but we need to move forward with something that's more reliable and accurate.
Absolutely. There's almost an aspect of ripping off the Band-Aid or the plaster at some point. And I do want to ask you about that as well. But you also brought up something else just then, in that data isn't consistent over time. It changes as much as people change over time. And it's quite easy to take that as a given, isn't it? To kind of think, I need property data. What are the aspects of the property that I need to understand? But then the other end of that as well changes over time. I think the example of labour rates and material costs over time changing is a really interesting one too.
Yeah, that's a great point. And in those scenarios, what you really don't want to do is try to rewrite the entire book at once. It really should start with tail risk and then running new data in parallel to prove impact safely. And that's where a POC can be really helpful. In terms of those regulatory and kind of market scrutiny changes, I think it's forcing more honesty about the numbers that are being provided. There has been a significant legacy of underestimating, on the whole, underestimating what reinstatement would realistically cost. And that status quo of good enough is now being properly challenged. In terms of transitioning, I'd say, 3 stages. You really want to segment first, so highest value and most loss-making segments, and then parallel run, so validate discrepancies before replacing anything, and then explain the changes transparently. So what's changed? Why has it changed? What is the distribution impact? And that's how you get to a point of trust.
Great. Yeah, thank you. I mean, that's a super, super actionable little bite of insight there. I think that'll be really valuable to many of our listeners. And to touch on then your other point, you mentioned a fear of, we'll call it a fear of change, which kind of oversimplifies it really. But we do discuss that quite a lot. If an insurer recognises that their historical book of business has been built on fundamentally flawed or inaccurate property valuations, there's naturally a fear of addressing it. So how should leadership navigate the necessary transition away from a comfortable status quo to a more accurate data-driven portfolio?
Yeah, really it is about communication within the organization of making those changes. Especially, so if you look at some quite complex variables, for example, so things like, let's say you've written some risk and you haven't looked at the outbuildings that are associated with the property. Maybe it has stables, garages, agricultural buildings, so forth. Maybe listed buildings hasn't been well accounted for. If you are trying to make that transition to a better source of truth, then framing it as trying to move towards that truth can be really helpful. And the benefits out the back of it should be more consistent pricing, more competitive pricing, better loss ratios. I think if you're able to really peg it to those outcomes rather than just to the move itself, that has a pretty big impact in terms of internal comms and making those business cases.
Absolutely, yeah. And I think to add on to the end of that, it's also instilling faith and trust in the fact that not only is the data usable, but it's going to be usable to those who need it without too much effort. So how can we deliver this new data to the systems they already know and use? How can we ensure that it has full transparency, trust, and explainability as well? I think when all those things come together, nothing really remains other than a desire for that new data. There's no drawback.
Yeah, you're spot on there. It's that infrastructure piece is actually worth mentioning. You have different insurers who are working on, some are still working on mainframes, some are in the cloud, some are working on APIs, some still prefer flat file. So for a provider like us, flexibility is key, and making sure that, if you're on Snowflake or if you're on Databricks or whatever, it's really easy to ingest. And exactly as you've just said, as easy as possible for anybody across the organization to be able to get their hands on it.
Mm-hmm. Yeah. Funnily enough, I had a conversation a couple of weeks ago about various organizations still being on mainframe, and it's sometimes tough to believe. But I think during that conversation, the other thing that we discussed that was quite interesting was fostering a cultural shift, a cultural attitude that accepts transformation and understands that in order to continue pursuing and achieving growth, the organizations themselves need to evolve, and the consequence of not adapting is a gap that's growing, and it's growing more rapidly as it grows. It's really a time to embrace transformation, I think.
Yeah, I can agree more.
Cool. So onto the data again then. So when you start providing highly granular property intelligence, it inevitably uncovers unusual or highly specific edge cases that traditional property mapping could perhaps entirely miss. So what are some of the most complex or unexpected property features that you've quantified?
Yeah. So we definitely have some unusual cases that were asked for. Things like tree proximity was relatively recent. So to be able to do that well, you need to be using vegetation models, and then you need to be using pretty high quality LiDAR data, some aerial distance to extents, and then regional gaps require custom methods as well. So I think that's one example. Uh, how you classify property, so something like end terrace versus semi-detached is quite ambiguous. So that's been a pretty interesting challenge to have had to approach. Listed buildings, I think I mentioned earlier, really quite difficult to actually derive the meaningful elements out of those. So that's been a huge piece of work for us. Planning permissions are very scattered across the UK, so fundamentally breaking those down and truly understanding what's going on inside those applications and the builds has been a mammoth amount of work for us, about 2 years of work to be able to build something national. And I mentioned outbuildings as well. So yes, stables, agricultural buildings, really difficult to work with. It's these ambiguous cases that become challenging. And I know we mentioned bedrooms earlier as well. Bedrooms are a funny and a weird one, because if you move a bed out of a room, it suddenly becomes a study. So asking a consumer a question and comparing that against suppliers is actually a pretty interesting question, because you can see a discrepancy there. So for us, we had to take an approach where we modeled the number of the number of bedrooms that will be declared at the point of the sale of the property. So these definition pieces, and also being quite creative with how we derive truth from multivariate sources, I think they're some of the more interesting examples that we work on, aside from the coverage of grass in garden, slope of roof, amount of flat roof, etc. So yeah, there's some pretty good examples.
And that last example you gave is another interesting one, because I think it calls in the need to examine data versus whether it's self-reported or not. And this is something that perhaps is quite prevalent in the world of claims. I had a conversation a little while ago on this, but self-reported data can often be coloured by the motive of the reporter, trying to understand what's going to be in their best interest to report when it comes to that data. As you say, that when a house is sold, the number of bedrooms is perhaps a different number of bedrooms to when it's insured.
Yeah, exactly. Exactly. It's and being able to put a stake in the ground and say this is how we're going to model truth. This is what truth is going to be. Makes it more reliable for a carrier to be able to actually measure risk and price fairly.
Absolutely. And would you say in that example, and perhaps this applies to other examples as well, but would you say the consistency is the most important point there, or would you say digging into the where you select the data from is the most important?
Outcome should be the primary objective, and that outcome will usually be improving loss ratio and improving pricing. And given any given insurer, they could have different requirements. It could be that they need consistency because they have a massive book and they just cannot move away from what they've previously written. For another, it could be that truth is truly the most important thing, especially for carriers who have had discrepancies in pricing, maybe have been very exposed to losses. Maybe they're working in a very unusual segment and need much better segmentation. So I would say it does depend on the client, but outcome should be what drives that decision.
Yeah, and I guess there's no one size fits all. I think it really highlights the fact that insurers vary wildly in terms of their specialties, in terms of their addressable markets. It really is a case of you need to understand your needs and then evaluate solutions and data providers according to that. And the same goes for validation, really, of data. It's not going to be the same process for every single insurer. It's going to depend on what you need and what you're trying to achieve.
No, you're spot on. And that should be the point of a POC. If you're going to do it, it should be to improve business outcomes. And yeah, exactly as you've just said there, it can be different per carrier. But yeah, that should always be the goal.
Looking at the wider market then, what's the immediate tangible cost of inaction for insurers who choose to perhaps delay upgrading their property data intelligence? And conversely, how are the early adopters leveraging this level of granular insight to fundamentally speed up their workflows?
Yeah, great questions. On the inaction, the biggest challenge it creates is adverse selection. So you're losing the best bets, so to speak, to better segmented competitors, and you retain the worst price risks. That's the worst case scenario. So that's where we see early adopters really making gains, that they just find the best risks that other players in market have ignored or overlooked. 3 early adopter wins, I would say. Conversion. So this would be things like pre-fill to reduce friction and errors in quote journeys. For some of our customers, especially some of our bigger customers, they don't even ask customers the question. They just rely on the underlying truth behind it and write on that. So that for us is obviously very validating that they have the trust that the data is predictive enough to not even need to be able to need to validate it. The second win for an early adopter would be backbook learning. So large scale testing, finding loss ratio differences that you can actually price against. And the third would be core underwriting. So moving from data enrichment, so to speak, to model features once trust is actually earned. And on the commercial proof side, tier 1 deals are not just small experiments, they're actually core infrastructure decisions. So baking a partner and data into your infrastructure to be able to carry that through to all business operations.
Interesting. Yeah. It really highlights the potential gain there is for carriers at the moment. And it really also highlights the self-reinforcing nature of competitive advantage in insurance at the moment. Like those with competitive advantage are only going to accelerate the rate at which they pull away from competition. So now's the time. You heard it here first. I've got one more thing to ask you, Jon. What's one thing you'd change about the insurance industry and why?
From our perspective, because we bang the drum about it so much, I would have to say transparency. That every data point used for an underwriting or pricing pipeline should have an audit trail and confidence level. And I would say truth should be the default. So, provenance, limitations, accuracy, all being declared upfront. And the payoff there should be that more transparency leads to fairer pricing, better products, higher trust. And when I say higher trust, I mean both internally within the company and with consumers. And when you're looking at things like the witch complaint, I think that it couldn't be more timely.
Brilliant. Well, thank you for that, John. That's great. It was packed with some really actionable insights. So yeah, thank you again for joining us.
Thank you, Jake. Thanks for having me.